Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Welcome to the Global View on this Tuesday. Well, let's take a look at macro data. Their latest US data showing the economy is still growing, but at a slower rate. Business activity slowing to a 5-month low in July as service sector growth decelerated, while input prices fell. The S&P Global Composite PMI Index, which tracks manufacturing and the services sectors, remaining in expansionary territory, falling to 52 in July from 53.2 in June. This comes ahead of the Fed policy meeting this week, with interest rates expected to be lifted by 25 basis points to 5.5%, and the rate futures market pricing in this expected move as the last hike for the year, with the Fed seen as remaining on hold until May next year before it begins cutting. However, US Treasury yields rose as investors priced in the possibility that the Fed could raise rates 2 more times this year, the 2-year Treasury yield rising above 4.9%, the 10-year at 3.87%. The US dollar, little changed against most major currencies, with the Aussie dollar trading at close to 67.4. Also note the euro did come off. That's as we saw weaker PMI data out of the Eurozone. Well, China's top leaders are pledging to step up policy support for the economy amid a tortuous post-COVID recovery, focusing on boosting domestic demand, signalling more stimulus ahead. The world's second largest economy growing at a frail pace in the second quarter as demand weakened at home and abroad, raising pressure on policymakers to deliver more stimulus to shore up its post-COVID recovery. State news agency Xinhua reporting that China will step up the adjustments, focusing on expanding domestic demand, boosting confidence and preventing risks. Currently, China's economy is facing new difficulties, it says, and challenges which mainly arise from insufficient domestic demand. That is after a meeting chaired by President Xi Jinping. Well, across the East China Sea, the pandemic was particularly hard on Japan, as it found itself snarled in supply chain tangles and limited by lockdown. But it appears that the land of the rising sun is on the rise again. I spoke to Carl Tannenbaum, chief economist at Northern Trust, for his take on Japan.
Well, Japan is the rare developed country where they're actually happy that inflation has shown some spunk. After 30 years of trying to bring a little bit of inflation back, Japan has finally gotten what it is seeking. Now, when we're talking inflation, we're talking something in the range of 3 to 3.5% versus numbers that are a lot higher in other developed countries. So this is hardly a runaway set of conditions. In addition, inflation has been boosted by some non-recurring factors that the Bank of Japan will want to recognize. Overall, I would expect that they will continue with their current set of policies for a little while longer. Remember that their economic outlook is driven very much by the external environment, with larger economies in the West slowing their growth down. Their absorption of Japanese exports might be more modest, and that might have the tendency to bring the level of inflation in Japan down naturally. So I think they'll pause and wait and see.
All right, so no immediate adjustment to the yield curve control then. And if that's the case, certainly the yen is coming under more pressure.
Yes, indeed. The interest rate differential between Japanese instruments, obviously, and fixed income instruments elsewhere is very large. And even with long-term rates coming down a little bit in Europe and the United States on the back of recent inflation news, that is not a set of circumstances that would lead investors to pile into Japan and purchase fixed income. I think Japan will want to be a little bit careful about how far the yen goes in that sense, and that might be one of the things that the central bank will ultimately have to factor into its decision to sustain what has been a huge program of bond buying over a long period of time.
Carl, can you put some historical perspective as to where the Japanese economy is travelling at the moment?
So I'm just old enough to remember when Japan was traveling on a trajectory that seemed almost to have no end in sight. In the 1980s, it was the envy of other economies around the world, having created a miracle on the back of the destruction seen in World War II and raised its industries, not just manufacturing, but also banking, as some may recall, to the very top tier of the world. And then the bottom fell out in 1990, leading the way to 3 decades really in the wilderness. Today, I see Japan as having economic fortunes that are arguably somewhat better than some of their bigger counterparts. They've had their pain, they've got a lot of policy support, they're getting a lot of attention as companies and countries look for alternatives to China. They've even reinforced their labor force growth by welcoming just a few more immigrants and also bringing their women's labor force participation rates higher than you see in both Europe and the United States. So they've done a lot of things right, and it may be time to reevaluate whether Japan is a great destination for capital.
Yet, how do you rationalise that growth given its population growth outlook? It's in serious decline with an ageing population.
Yeah, I often say that Japan is not an aging country, it is an aged country. And birth rates are very, very low, and obviously the pandemic across economies has not helped things. I know this is going to sound macabre, but the way that demographics work is you will be losing a certain number of elderly people every year quite naturally. And as that process works its way through the system, Japan in the next 20 years will actually be much younger than it is today. They still have hard work to do, and keeping up economic growth is partly the demographic issue, but countries like Japan will also really have to move heavily into productivity enhancing fields like generative AI. And the country is already trying to be at the forefront of that new vanguard.
So, Carl, you have reflected that optimism that you're seeing ahead for Japan, and I guess that is reflected in what we've seen in the local stock market.
Yeah, it's got to be gratifying for Japan not to be the winner of the wooden spoon for in the stock market competition, but in a year that so far has produced some pretty good large cap returns in large countries, Japan is leading the list, and that's certainly giving portfolio managers who are internationally diversified something to think about.
All right, so what about that's internally? What are we seeing as far as inflows into Japan? Particularly, I guess, when you see what's going on across the strait there in China.
Yeah, I think Japan has been a minor recipient of some of the reshoring investments that you're seeing prop up around the world. The data on the fraction of exports that come to the United States and Europe from China is declining. That is going to have to be replaced somewhere. The early evidence suggests that in the case of North America, the production has shifted from China to Mexico. In Europe, it's China, in some cases, to the eastern part of Europe. Japan's gotten a little of that, but it suffers from some of the same limitations that China does. It's far away, and it is vulnerable since it purchases parts from other parts of Asia. If there are supply chain problems in the emerging countries in Asia, Japan would probably be in just as bad of a position as China. So that has not been a big boost to the Japanese economy.
What are we seeing at a corporate level there, particularly as far as CapEx is concerned?
So they've certainly doubled down on some of the investments for the reasons that I highlighted earlier. They're trying to keep their margins high and their competitiveness up by really plowing money into some of the technology that can make their workforce more productive. Now, that's something a lot of countries are doing, but Japan, because of its business culture and the collaboration between large companies and the government, might have a better chance of getting over that finish line than some other countries do. And so as they coordinate that throughout the country, through the keiretsu and the government, I would expect good things from Japan on the AI front in particular.
What are you seeing? I mean, certainly Japanese politics is always interesting and quite volatile. Are you seeing stability at the moment and encouraged by what you're seeing as far as policy is concerned?
You know, I have to say, if we are grading political stability on the curve, I think Japan, for all of its challenges, is probably towards the top of that list. I mean, who would hold up the politics in Europe, the United States, even in Australia, against the relatively civilized set of debates and parties that they have in Japan. Again, because of their post-war experience, the need to band together to face external threats, to face internal problems, is still much deeper in Japan than it is elsewhere. And again, that's one of the reasons why they are in a reasonably good position as we look forward over the next decade or so.
And I guess more broadly then, geopolitically, how is it placed, given that traditional rivalry and even conflict with China?
Yeah, that is certainly something that we have to take into account. As you've highlighted, there has been antipathy between China and Japan for centuries, if not millennia. And certainly that's something that you have to keep in mind. In my own view, though, China, because of its growing list of economic challenges, is much less likely to be as belligerent as we might have thought 2 years ago. They're fighting for market share, they're fighting for hearts and minds, and I think that it would not be in their best economic or diplomatic interest to create trouble with Tokyo. So if you believe that thesis, then the environment surrounding Japan, while not riskless, let's not forget that North Korea has been lobbing missiles all the way over Japan. It might not be quite the incendiary situation that it could have been.
Carl Tannenbaum, Chief Economist at Northern Trust. That is the global view. Just before we go, a check of the local markets. SPI futures up more than 0.5%, indicating a strong opening ahead when we get going in just a couple of minutes' time. Stay with us. The open is just moments away.